Okay, now I'm gonna start with the news that has come out today and the news that is about to come out tomorrow, just to have an idea of when to expect volatility in the market. So we had the core PPI today, the unemployment claims, and they were all negative. We're going to look at the DXY and see what the DXY did today, and we're also going to look at the S&P to see what the S&P did today on in connection to this, and also to the news that came out on yesterday, which was a little bit of a mixed bag because the inflation showed signs of slowing down. Now, we are expecting news tomorrow at 3 p.m. So a little bit later, around the start of New York, and it's the consumer sentiment. Now we have the consumer sentiment, and again, that's the last news before going into the weekend. I don't anticipate any change in the ranges that we have based on this. We don't have a busy Friday ahead. It's just this bit of volatility that will hit the charts tomorrow. Now let's go to the S&P. I'm gonna do the S&P because it's the chart that I have open at the moment. So as you can see, the S&P has reacted. It has reacted to the volatility by ranging up and down quite violently on the daily chart. So it did what crypto did in an equally violent manner. So this is Tuesday's candle. So you can see Monday, Tuesday, small candles holding the range, holding support. And this one here was Wednesday's candle, up and then down and then up. So it closed with a doji, which is generally for rejection. So we had rejection here at the top, and it seems like we have rejection here at the top again. However, we are above the 50 EMA band. We are holding the 50 EMA support, the 200 EMA as well. We are above all of that support, but we're not looking good in terms of holding it in the coming days. Now, just to be clear, I anticipate more sideways for the S&P, and I think that will reflect in crypto in the same way. I think we will keep moving sideways for the days to come and maybe the weeks to come, until we see an opening of a new range to the upside or to the downside. And by sideways, I mean daily range sideways, not 4-hour sideways or 1-hour sideways. So I'm talking now about the daily S&P chart. So between the 200 and the peak here is where we are. We are holding the support of the trend line. So this is the trend line that has been set for a long time, since April 2021. And it's been support, resistance, support for a little while, and it is support once again. So we are holding this trend line. We are holding the 50 and the 200 EMA on the daily. We have the stochastic on the daily turned up, but we're not really going anywhere. So we might be consolidating here unless there is some dramatic move that breaks the 50 EMA and breaks the 200 EMA on the daily, in which case we're going to be turning down. So I'm going to need to see those two events happening before I see a change in trend. On the weekly time frame, again, we are above the 50 EMA band. We've been holding above the 50 EMA band for quite a while. 1, 2, 3, 4, 5, 6, 7, the 7th week above the EMA band. The stochastic on the weekly has crossed down slightly. Again, it might be a consequence of the recent price action. Okay, we have the support of the 50 EMA on the weekly. We have the, I believe this is the 20 on the weekly that is coming up. Let me just double check. It might be the middle. Yes, it's the midline of the Bollinger 20 MA on the weekly that's coming up. And again, that is a very good sign in terms of support. It's there to catch price action if it falls onto it. And again, any correction done in the space of the 200 EMA, 50 EMA, 20 EMA on the weekly, any correction done in this space makes any lift from the bear market sustainable. So it's not, I know there will be a lot of fear in the market when the 50 EMA is being tested, when the 200 EMA is being tested. Unless we break and we hold the next candle below them, they are still holding for support. So we have to see a weekly candle close, the next one confirm to say that we have lost the 50 EMA or the 200 EMA for support. It's the same as any other time frame. Until we lose them, I believe that the daily trend will be continuing to range sideways. So until we break the peak that we set in August and February, these two, because these two are the superior peaks so far, until we break those peaks, we are not going anywhere. So ranging sideways on the daily time frame in the S&P means ranging sideways in the daily range for the coins as well. And we're going to look at the daily range for both ETH and Bitcoin, because these daily ranges are the ones drawing the space right now that we're moving in. So it's daily ranges we are moving, sometimes on the 1 hour time frame in the daily range, sometimes on the 4 hour time frame in the daily range, depending on how big the swings get. When the price is getting compressed towards the end of a pattern, it will be the 1 hour time frame. Now I'm just looking here to see if I can do a one of those flags. Yeah, okay, like a Super Mario flag or a shark fin. This looks like a top out formation, and yes, if we do get rejected from this top, we look to be heading down to the 50 EMA on the daily for the S&P, and that would be again very, very sustainable for this swing. It would be us doing a 0.5 correction of this lift, and you know that a 0.5 correction indicates momentum to the upside is still being held. So no tragedy. We need to keep our technical heads on when that happens, because it doesn't necessarily mean that we're gonna go down one more step. I'm very conservative at the moment about the third step down that I could see a while back, because the support is building below the coins, the S&P, so the support is getting stronger and stronger as we are holding it. Okay, let's have a look at the DXY again. It's a very it's just to check in to see where the DXY is. The DXY is meeting some sort of a resistance at the moment on the daily. It has, as you can see, it's quite the opposite of the S&P. The 200 EMA is away from price action at the moment. The 50 EMA hasn't yet been reached or back tested. The band, we're going slightly into the band, but we can't break the previous high. We're still printing lower highs. Higher lows, lower highs. We seem to be accumulating here, but in order for this to become a W formation, we need to break this peak set in May. So once that breaks and we have continuation above the 50 EMA on the daily, we will see a lift. And when we see the lift in the DXY being inversely correlated to the coins, we'll probably see the coins correct some more. And correction is the theme of today's session, because again, I'm not looking at drops, massive drops for the moment. I'm looking at significant corrections for the swings that ETH and Bitcoin have done. Now, these corrections are happening at a very, very slow pace. Let's have a look at the daily for BTC. Again, I'm seeing a mixed bag of messages. We've had everything that we needed to start the correction down to the 0.5, which is 24.5. or even lower, the golden pocket at 24k, 702 at 22.3. So we've had what I was expecting to see last week, which is a breaking of the 20, a backtest of the 20, continuation down. Again, because it is a daily time frame that I'm working on, I would be looking for 4-hour signals, and that's what I waited for in my trade that I took this week. I have 2 short positions open at the moment for BTC and ETH. I will show them to you. I posted them in the chat as I opened them and how I managed them when I was moving my stop losses. So the 4-hour back test here was quite obvious yesterday, and then the continuation down happened, not without volatility, not without retraces. I moved my stop loss at entry point quite soon after getting into that position, because it looked very, very volatile, and it risked knocking me out without any profit. So here we are on the daily. We are below the 20 EMA, we're below the 50 EMA. We did so here for 1, 2, 3, 4, 5th week. We tested the 55 EMA, 5th day, sorry, we tested 55 EMA and got above it the next day. So that's what happened previously. I don't think it's going to happen right now. This looks a little bit more determined to continue to the downside. However, we have the MACD waves that are slower in sellers. So again, a slightly the MACD has crossed to the downside, the midline. So the trend down is likely to continue, and that's also backed up by the stochastic, which is down, but the waves in sellers are getting diminished. The ranges that I'm looking at are the ranges that I keep posting on the chats. At the moment, this is the triangle that it's fallen out of, threatened to go back in, but it was just a back test. 24.4 is the technical target. And here are the ranges. Again, same sideways channel at the top, topping out formation. 25 would be the technical target of that channel, so quite similar to 24, 25. However, we must be careful, because if this is whole, like you can see this bottom here, that is not yet broken. So this initial bottom here in the sideways of 26.4 hasn't yet been broken. There it is. So I'm particularly mindful looking at my short trade. I've already placed a stop loss to secure profit. The reason being, this has been holding for quite a long time, and it could be a trap. There is a lot of liquidity right now in short positions that are open across the board in ETH and Bitcoin. So I wouldn't be surprised if market makers want to spike up again, liquidate and collect some liquidity from these short positions, and then push it down into the correction, because that could happen as well. Last week I was quite confident we were gonna break to the upside and see the 35k, but the weekend showed me otherwise. So I'm staying quite adaptable because we are in this ranging sideways and we could go both ways. What I need to see that would give me more confidence we're heading lower is the breaking of the 26.4. So breaking the 26.4 would be the breaking of this structure, and we would be heading down towards the target. And I'll show you the trade really quickly. So this was the 1-2. I got an entry here on the golden pocket. I had the stop loss $100 above, and as soon as this retraced half the candle, I moved the stop loss to the entry, and then I continued to wait, continued holding the position. And today I placed my take profit at the 800 EMA on the 4-hour. 25.3, a little bit more conservative than my technical targets at 25 or 24.9. The reason being this 800 is quite strong on the 4-hour. And I anticipate we might get that. Now I moved my stop loss a little bit to secure profit in both trades. I have it right here above this peak on the 1-hour. So if it's I've taken my signals on the 4-hour, I'm monitoring the trade on the 1-hour. If we don't break this bottom, this low here quite soon, I am looking at taking full profit, because I've showed you the range on the daily. It looks like 26.4 is still holding, and the full profit would be somewhere around 50%, where my stop losses would be 3.5. So I'm okay with taking 35%. It's less than 2 days since I opened this position. It was yesterday after the news. The news spiked it up. It gave us a nice 1-2, and then I'd be happy with getting that 35%. It would contribute to my 1x target for the month. So that, again, we have 2 bullish divergences on the 1-hour. That's why I'm following this with the stop loss, because I don't want this to reverse the way it reversed yesterday. Yesterday it did a full low ADR to high ADR to low ADR, full cycle. Okay, so in summary, we are within the same ranges. I've slightly adjusted these support and resistance lines because the 26.4 hasn't yet been broken, so I think it's only fair to adjust it. We are in a head and shoulders formation. It looks like it's reversing. Can we see another spike to the 31k? Yes, we could, in which case this would become a larger M formation or a triple top formation, however you want to, whatever you want to call it. So that would be the case if the market makers want to collect all this liquidity from these shorts. I will keep the position open to the 800 EMA on the 4-hour, 25.3. That would be the target, and in the meantime, I've secured a part of the profit. If this is it, if this is the bottom, I'm taking 60% of the whole range. Okay, so that's it. I'm gonna be posting tomorrow at the Friday and the weekend levels, depending on what Asia does tonight. I have to wait to see what Asia does tonight, because Asia might break that 26.4, in which case we're expanding the range downwards towards the 25k target. If Asia doesn't break the 26.4, if Asia doesn't break the previous low, then I think this is a bottoming out structure on the 4-hour, quite strong. It's quite a strong structure if this is it, and we're going all the way up to 31k, in which case I will be updating these charts and updating you on the levels. Okay, that's BTC. Let's quickly have a look at ETH. I won't keep you too long today because I've already told you the main points on Monday, and again, unless Asia moves and breaks our range, we're not going anywhere. So ETH has done again a beautiful formation here, head and shoulders. Let me show you the yes, that's Bitcoin. That's like that's awfully similar to Bitcoin's. My levels, here are my levels. So as you can see, ETH has broken into the next level space, so absolutely broken this line. However, it is known to zigzag across lines, so it zigzagged across here, broke to the upside. It looks like at the moment it's done a lower low, it's broken the previous one, but it hasn't, just like Bitcoin, it hasn't broken the initial low here, 1760. And I'll be moving this down to here. There we go. Again, to reflect the same phenomenon that I've seen for BTC. I'm not saying it's not going to break it. It looks like it's going to break it. All I'm saying is that the 1 hour stocks on both ETH and BTC are looking like they need to catch a breather. They're both up at the moment. Bitcoin's was a little bit more tragic than ETH's. But we don't have any reversal structure on the 1 hour. We don't have any support for that. We do have a back test of the 21, 2, 3, 4, 5, 6, 7 times the 20 EMA has been back tested, but it just continued to drip down. If we check the 4 hour, we've only seen since the breaking here 1, 2. We know we need 3, and then the fourth one is generally the break. Not unless we take this as, yeah, we could take this. Do you know what? I'm gonna take this and I'm gonna put the whole, because again, this is my trade is with a stop loss to secure profit for this reason, because yesterday's backtest was super. Today's was quite close to the 20 MA but didn't quite reach it. Now on the daily, we are in the same situation as BTC. We have lost the support of the beautiful MAs on the daily. We seem to be heading down to the 1680. I'll show you where my target is for the trade as well. We're seeing a lot of support lost here, the way we've lost it here. So a drop down to the next level, the 200 on the daily, seems quite likely. Now there is a lot of liquidity, and again, unless we move down faster, we might be in we might see a reversal again to backtest the top of this range. With ETH, it's quite hard to define the top of the range because it's moved so in such an explosive way. 2025 and then 2150. So if we hold the support, again, my conservative target is 1950, but I would advise if you start longing from tomorrow, because we've been holding support, taking only 50% of the position and then DCAing in if you see the resistance break. But we'll have that conversation when we get there, if we hold support. This is the big if. Again, in my trade, we have made a lower low, which is super. What we haven't had is we haven't broken the previous range at 1760. My target would be $17.18. That would be the 800 EMA. Again, it might go lower, it might go lower, might build momentum once that 1760 level is broken. Very happy to be taking profit there. That would be from the point of entry, 8.7%. Now again, I did the same thing with my trade as I did for BTC. Here it is, the golden pocket, the 1-2, it gave it to me. I followed the trend down, stochastic was down, 4 hours maxed out. It was strong signals that it was going to reverse. And here I followed it down. I put a stop loss today above this 1 hour candle, gave it a little bit of space above the M2 level, because if it gets back above the M2, we're looking at reversing. If it keeps the M2 as resistance, we're looking at moving down towards my target. So all in all, for both of them, the 4 hour levels are holding, and as long as the 4 hour levels are holding, because of how much liquidity has been accumulating in the short positions, we might be expecting a lift up to collect this liquidity. We might continue to range. The S&P looks like it's going to range, so we could see this this ranging market continue for the rest of the month.